Chakri Lokpriya as well joining in our studios. And Chakri, lots of exuberance this morning in the markets with scaling those new highs. Very positive sentiment. But would you say it's largely been driven by, the kind of global cues that we're seeing?
Global cues have clearly helped the overall situation, and plus, of course, the overall improvement in sentiment in the Indian markets. So because we all know it's well documented that economic activity is at a low, but usually these form the inflection points for the stock markets being forward-looking will start moving higher, and that move has begun. So I think now it's time. It's yes, it's consolidation mode, but it's now I think we'll start seeing a broadening out of the rally as we go into the next year.
That's what we're hoping to see, Chakri, for sure. We've been talking a lot about some of the pockets where you think it's the right time to just get in and wait in anticipation of that. But just to reiterate that on a day when, perhaps investors are now wondering whether it's the right time, what would you be looking at?
Now, clearly, if you look at, for instance, you take the Nifty. Nifty is up about 11% this year. On the other hand, the mid-cap index is down about 5.5%. And even if you look within the Nifty, it's just financial services and consumer staples that have driven this whole rally. A whole bunch of sectors, cement, industrials, power, consumer discretionary, autos, they're all down -10 to -30%. So as the economy bottoms out and demand comes back into these sectors, they will start supporting the index to take it higher.
On with us, this is Closing Trades, and you've got media, consumption, infrastructure that are at the losing end, while the Nifty Bank is holding out in the green by the skin of its teeth. 12,037, that's the status on the index right now. We're in conversation with Chakri Lokpriya, who's right here with us in our studios. Chakri, what about what we've seen with L&T, that latest report talking about the slowing state of capex and how that's a risk to the company? For L&T in specific, are you worried about this, and what's the overall scenario for companies that are closely linked to the capex cycle?
Well, clearly not worried about L&T because L&T is the bellwether of industrial capex in this country. And mind you, this is a company which has an order book which is 2.5 times. So even if orders book slows down, which probably will because of the weakness in the economy, still its earnings are not at risk for the next 2 years. So the whole storm in a teacup is all about order book. And order books, as we've seen over various cycles, they all slow down during economic uncertainty, but come back in a hurry when the cycle turns. So it's now a well-known fact that, state capex, central capex has slowed down, but the company is trading at probably 16 times. It's one of its lowest multiples. So from that perspective, clearly L&T is a buy at current levels.
Okay, so that's the view coming in on L&T. Chakri, the divestment agenda, BPCL on your radar or any of the others?
The government has a big target, and clearly BPCL, they'll probably do it. But the question is now the valuation for BPCL, because, just the listed companies that it holds account for more than probably 30% of its valuation. So what they will keep back and what they will keep out of the strategic sale becomes a matter of discussion. And so from that perspective, the stock is likely to languish at current levels. But clearly, it's a big ticket item from a strategic sale perspective.
Chakri, how long before we actually see a meaningful broadening of the rally? The excitement in the benchmark, and that too only in the 10-15 names, spreads to the mid and small caps.
See, if you look at what's rallied, we've said it's in financial services, and we know it's consumer staples. Both these sectors are domestic-facing sectors. Now, if you look at all the other ones, cement, industrials, even consumer, auto ancillaries, auto companies, all these companies have a good component of export as well. Now, with the corporate tax reduction, there's an earnings boost, and also more importantly, it makes these companies more competitive in the export markets. And that is a more longer ticket item, because they've just cut the taxes. So that will take probably next year for it to start showing results. And so that is where you'll see a broadening out of rally from just the financials and the consumer staples to these more cyclically intensive sectors.
Okay. Kunal, anything else from some of these movers? Pharma names in particular, from a Biocon to a DRL to, we've seen a bit of a move across several pockets in the pharma space. Even a Lupin seeing some action today. Anything standing out?
So I think DRL stands out to be one of the topmost, I think one of the best buys in terms of pharma stocks as of now. Because, earlier as well, the stock was trading above its 200-day moving averages. It was one of the few stocks, I think Dr. Reddy as well as DV Slabs, they were the two stocks which have managed to trading at the higher point of their price trajectory as compared to many of these other pharma stocks. But so I think that's where I think the safety cushion could lie for individual pharma stocks. But even Lupin is showing a lot of potential on the short-term charts. It's an inverse head and shoulder breakout, and the breakout is almost, or the pattern height is almost a 15% pattern height for Lupin. So the stock stands potential for gaining another 40 to 50 rupees at least. About today's high. So I think 840, 860 could be a price potential for Lupin. So individual pockets of stocks still offers a lot of opportunity. So I think Dr. Reddy's and DV Slab could probably be the top candidates amongst them.
All right, let's also go across to Jayesh now. He's taking a look at how the metal index is on track to gain for a third month now in a row. Jayesh?
15% is the gain that the metal index has clocked for itself in the past 3 months. Also, it has been the second best performing sector after the auto index. And if you have a look at some of the technical parameters, say the 50-day, 100-day and the 200-day moving average, if we can have a look at that picture, it trades above the 50 and the 100-day moving average. However, trades below the 200-day moving average. Stock-wise, if you have a look at the 15 stocks that make up the metal index, a significant portion of them in fact trade above the 50-day moving average, except for 2 stocks, which is Vedanta and Nalco, and you have 3 stocks which trade below the 100-day moving average. If we can go to the next plate, you'll have that picture as well. The 200-day moving average, there are 8 stocks above, while there are 7 stocks below the 200-day moving average picture. If you have a look at some of the valuation parameters as well, there is a significant value in which offered as per the price to book that we have. You have Coal India, Hindustan Zinc, Vedanta, Tata Steel and JSW Steel. Have a look at the estimate price to book. Anywhere the discount that they trade to their long-term average, which is the 5-year average, stands at about 10 to 40 odd %. So good valuation, also comforting as far as the price rally is concerned.
Okay, let's take a look at some of the other pockets that are moving. In fact, Yes Bank has been in continued focus. Chakri, let's get your view in on that. We seem to definitely have institutional interest. We've heard the management commentary. Even other names in the banking pack, like a CSB, have seen a lot of interest of late. What's looking promising?
If you take CSB as a case in point, this is a bank which has gone through the restructuring phase of its own book from GNPAs of about 7 to it's now GNPAs have come down to about 4. Net NPAs are slightly under 2%. And it's a bank with southern focused. It has a good mix of both SME as well as what you call retail banking. This is the kind of book which Yes has. And of course, it's a more a pan-India story. So now Yes is clearly on, again, cleaning up its books and doing all those good things. And it's trading at 0.6 times book. CSB is, IPO is valued at 2.2 times book. So from that perspective, if the capital raising for the 1.2 billion, which Yes Bank is talking about, does indeed happen anytime soon, we'll see a significant re-rating for Yes Bank as well as RBL Bank, because it's also very similar in nature.
In the meantime, what about the way the overall Z story has unfolded, Chakri? Today, of course, the stock's under pressure on the move by Siddharth Chandra resigning. But how have you, read into the story that's played out, and what does a shareholder do?
No, it's clearly quite a landmark event in the sense that he, in a sense, created the industry. And so from that perspective, yes, it's probably quite a sad event. But on the other hand, now it's an opportunity for this new board, which is made up of a mix of all kinds of, including bureaucrats, now to clean up the book, the intercompany borrowings. And so from that perspective, all that is going to pan out in the coming months. Yes, it's an inexpensive stock, but clearly there's a long road ahead before they clean up the books.
What do you do with Yes, Chakri? Because just when you thought the revival was in sight, comes the divergence report. And you feel a little cheated in that sense, because not everything was, was transparently declared at the previous time.
That's a good question. I think that's partly the reason why the bank is trading at 0.6 times book. I mean, so clearly, whereas you have a CSB pricing at 2.2 times book, and you have, of course, the well-run banks trading at much higher valuations. So from that perspective, I guess it is a cleanup which is happening, which is causing this divergence. And this quarter will probably be a quarter where we will see a further amount of cleanup. But I think it's all in the price. So around the 60 rupee mark for the stock, I think it is, despite all the negatives, is kind of largely in the number.
Okay. You mentioned auto might come back. Are you looking at picking up any of these auto stocks? Already hold any of them?
If you take any of the frontline names, whether it's M&M, Hero Moto, all these stocks are still down about 15-20% year to date. And November month sales are, hopefully it seems turning up slightly better than expected. So against that backdrop, I think there will be some amount of confidence that comes back into the system that sales will begin to come back.
What about Motherson, Kunal? Because we touched upon it when it first started moving, but it's actually been successively moving the last few sessions.
So it's been moving up very well. There was this knee-jerk reaction 3 or 4 days back for stock price, where it fell almost 8% or 9% on a single day, managed to touch back its its mean, or a couple of moving averages acting as a mean reversion. And I think post that as well, we've seen a stable uptrend. But what's been different this time in this 4 day or 5 days of up move for Motherson Sumi is the lack of volume participation. The volumes when the stock was correcting from 138, 140 to almost 122 is almost half the volumes right now which you're seeing in this rally. So that goes to show that there's lack of interest into the stock price rally. And generally when you see low volume backed price moves, it tends to be more short-lived. So I think at current levels of 134, 135 on Motherson Sumi, there could be chance that you might see the stock coming back lower and trying to settle back into a range. I think the broader chart patterns still indicate that the stock has to go through a big time correction before there is any decisive change of trend on the upside for Motherson Sumi.
Sure. Okay, that's the take coming in Motherson Sumi. Just looking at some of the other names which are looking active right now. Maharaja Batteries, Motherson Sumi, one such case in point. There's a Biocon and there's Ujjivan which is also holding out. For the index, we've completely cooled off from that all-time high, but we're still holding on to that 12,000 mark. The problem is really with the market breadth. So Z, Infratel, BHEL, Dish TV, Idea, these are all names which are facing the heat in trade right now. Chakri, how do you approach telecom? I mean, is it even a worthy trade after the recent bout of traction that one has already seen?
I think the trade in telecom is over for now, simply because, there's a huge amount of uncertainty. There are any number of moving parts in the sector. You have the AGR, you have the tariff increases. Now, these guys have to raise their tariffs by something like, according to various estimates, 70% over the next couple of years to just offer services at cost. And now, so against that number, which means they have to do that, they can't do it in one go or in fairly frequent, because that hurts the demand. Then on the other hand, I think the government, the Supreme Court, whoever it is, has to redefine what AGR really means. And so that all these things will take time to resolve. And meanwhile, if you take in Vodafone, Idea is trading at net debt to EBITDA is probably anywhere between 8 to 9 times. So from that perspective, hugely leveraged. And now with it going into a Supreme Court, it leads into a limbo until it's resolved.
Yeah, absolutely. Okay, Chakri, great to have you in the studio with us. Thank you so much for taking the time out and joining in.